If she pulls this off and can increase the capital gains, I just did some math here so you know what it is. The average home in America is $440,000. You would have to increase the price of that home 50% by $208,000, almost a full 50%. Would have to go from 440 to 648 for you to make the same amount of money.
Hey, welcome back, everybody, to my YouTube channel. I am the Distinguished Professor, and this is the Distinguished Professor YouTube channel. As you can see from the opening video, we're going to be listening to Grant Cardone as well as some other people talk about Kamala Harris's proposed tax on unrecognized capital gains. It's a complete cluster crap. I promise you that. They'll explain it in great detail. But as you know, I'll interject here and there, but I'll save my comments for the end. But before we get started, make sure you like, share, and subscribe. Make sure you also tap that notification bell so you're not targeted any one of my next sessions. Well, as you know, without further ado, let's get started. Class is in session. So let me go ahead and pull this video up here. We're going to listen to Grant Cardone.
Hey, big heads up for all you guys out there that have heard about Kamala Harris's capital gains tax and proposal to raise unrealized gains by 25%, up to 25%. Look, this is not political. I'm just giving you some information about your finances and your money. If you're in housing or you own stocks, this will destroy the middle class. Absolutely. I don't know what's going on with their administration, why they're coming up with some of these proposals, or if they even expect to really try to push them through or not. I don't know. I can tell you this as somebody that's studied tax. I have an accounting degree. I've studied tax. I've been investing in real estate and doing my best, proudly to say, to reduce my federal tax bill every year. I don't mind paying local taxes. I hate paying federal taxes. So if you are in real estate, you hate paying the IRS, you own a home, your mom, your grandmother own a home and they got equity, or you're a real estate agent or a broker or investor, I'm just going to tell you how this affects everybody. Okay. Again, this is not Democrat, Republican, or whatever. So I know a lot of you guys out there hate Donald Trump, but do you hate him so much that you would pay $200,000 extra to the federal government to sell your house? Like this election, you guys really need to look at your money and your finances. America's at a critical point. We're probably in more economic trouble than I've ever seen this country in my lifetime. I'm 66 years old, so I've seen a few cycles now. And again, this is not me trying to get you to vote for anybody, but people should take a better look at their finances. If she pulls this off and can increase the capital gains, I just did some math here so you know what it is. The average home in America is $440,000. You would have to increase the price of that home 50% by $208,000, almost a full 50%. Would have to go from 440 to 648 for you to make the same amount of money. So you would have to take your house that's $440,000, average price of a home in this country is $440, and they would immediately all go to $640.
So let me say something real quick. We all know how Kamala talked about giving people an additional $25,000 towards a home, wanting to build 3 million new homes within her 4-year term. If it's only 4, he just showed you the house cost is going to have to raise in price almost 50% over value just to be able to make the same amount of money you would have made if that house was $440,000. This is what people are talking about when they say her what she's talking about makes no sense, because if you give someone 25 grand, what's that 25 grand going to do when you're trying to buy a house for $650,000? That's a drop in the bucket. For 648, sometimes you have to get a jumbo loan, which is 35 to 40%. Sometimes you know FHA, unless you live in California or New York, is not going to approve a house for 648. For the most part, based upon their economic guidelines and their terms of how FHA works, with that 3.5% down. So you're more likely not going to be putting 20 to 35% down on this home. 20% of this home is roughly, was it $130,000. That's 20%. So who has an extra 130 in their pockets to go out there and put down on a home that actually only costs $440, but you're having to pay 40% over asking because the person who's selling it needs to make their money back so that they can pay the realtor and pay the loan off. You see what this causes? It's a cluster crap. Let's continue, Grant.
48. If every seller said, I want to make a certain amount of money on my house, why? because I've been investing in this house my whole life. It's the only investment I have. I'm ready to retire and I want to make my profit, and I don't want to share half of it with the government. It's not fair to somebody that just sold yesterday and didn't have this capital gains problem. By the way, they just passed this in Canada. It wasn't 45% capital gains, so it was 64%.
And actually, that's actually not correct. It's a little bit higher than that. Give me one moment. I'm gonna pull that up to show you exactly what it was. So yeah, look, I went on Scotiabank, which is one of the top, if not one of the top banks in Canada. I went to their website here to be able to show you. This is from August 27th, 2024. So that was as of yesterday. This is the key takeaways. Capital gain is another term. We know what that is. But anyway, the 2024 federal budget change to the inclusion rate of the capital gains tax mostly affects corporations, trusts, and people with a capital gains of more than $250,000. Let me see if I can go a little bigger on this for you guys, as you guys can see it. This is what I'm reading here. So look. So this is some sales of assets are exempt. But let's look at what that Grant Cardone said 64%. Let's go down and see exactly what that looks like. Scroll down a little bit. So look, as of June 25th, 2024, the capital gains rate, inclusion rate, changed from 50% to 66.67% for corporations and trusts. Hold on. So 67%. Are you kidding me?
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 Yeah. So this is what sort of Kamala's talking about. I mean, think about it. I don't understand how Canadians can afford to live. Like 50%, bro. You went from 50% to 67% taxes. And don't get it twisted. It says corporations and trusts. The properties I've owned, I put in trust. I tell people to put their properties in trust from a transfer of wealth or transfer of ownership standpoint, because when someone passes away, you don't have to really go through probate when it's in the trust, because you just make the person you wanted to go to as the beneficiary. So it's a lot easier to transfer ownership of properties, things of that sort, in a trust. So they're taxing 67% on trust and corporations. Now, I don't have the video, but I did watch a video where there are doctors who put their money into a trust for their 401k in Canada. And what's going to happen is they're going to actually be taxed 67% on that. So doctors, for the most part, are either going to stop going into that profession or try to figure something else out to sort of bypass that 67%. That's astronomical. That's absolutely crazy. 67%. I don't know how you can afford to live in Canada. Now I see why my ex-girlfriend, who's Canadian, came to the States to work. I mean, I don't see how the Toronto Raptors players are affording to live in Toronto and having to pay that 67% capital gains tax when they sell a property. This is absolutely ridiculous. This is crazy. As a matter of fact, I'm going to show you a video before I go back to Grant Cardone. I'm going to show you a video of what's going on in Canada so that you're abreast of what I'm talking about, so you can see what America's going to look like if Kamala gets in and passes unrealized capital gains tax. So I'd like to show you guys videos because, like Stevie Wonder says, I can show you. I mean, seeing is believing. Again, here's the video about what's going on in Canada when it comes at 67%. Let's go ahead and play this video. So a minute and 53 seconds.
Owners looking to sell a cabin or investment property will soon face a steeper tax rate. The federal budget tabled earlier this week increased what you'll pay on capital gains above $250,000. Currently, 50% of gains beyond that amount are taxable, but after June 24th, that rate will jump to 67%. Part of a federal Liberal move to increase tax revenue from wealthier Canadians.
I knew I had to call a couple of my clients, and I knew a whole bunch of people would be calling me about this.
The feds say this will affect the top 0.13% of Canadians, but this wealth manager says the tax will often apply to families at moments when inheritance is passed down.
There's two scenarios where I think your average people will get hit by this. The first one are people with revenue properties or cottages that want to sell because they might have bought it generations ago, it might have been passed down.
So just how much will this change what you owe? Previously, if you made $400,000 in gains on the sale of your secondary property, you'd pay $107,000 in taxes. Under the new rate, you'd pay around $120,000. Realtors say there could be a wave of new listings on the market as some people try to sell before the new rate comes into effect.
The higher you ramp up capital gains, I think there's just more incentive to hold real estate like longer term and not sell. So sure, over time, does that mean maybe there'll be fewer listings turning over, coming onto market? Yeah, maybe. It's just hard to quantify if that's going to have any material change on the marketplace.
It's not like you sell your property every day, or every year. It's not like your parents pass away every year. These are one-offs, but they got cut off in this.
Around 11% of Canadians own a second property and could be subject to the higher tax rate. Michelle Gassoub, CBC News, Vancouver.
So as you can see, I like to show you guys things of when I can find another country is doing something that we're proposing. I like to show you what the future could look like. So there are already issues and questions in Canada, and this just passed in June. So like I showed you Venezuela, but this, like I said, this passed in June. So there's already questions. And there's a lot more videos about this where people are a little bit hesitant about what's going on and how it's going to impact. But the odds certain that 67% tax hike is ridiculous. So we're gonna go back to the Grant Cardone video and let them rock out for the rest of that video. Like I said, I'll interject here and there.
This can happen in this country, and they're threatening to do it. Okay, now this is what happens if they pull this off. The average home goes from 440. You real estate agents, real estate brokers, and investors, and immediately the price of that house, if they're a builder, a seller, they've owned a house for a while and they want to sell their house, they're going to take that up to 648. Well, the average mortgage in this country today is unaffordable for most families. We have the lowest mortgage applications since 1996. 30 years ago, we had 70 million fewer people that lived in America. Not counting the illegal immigrants, probably 11 to 15 million illegals that they're proposing in California. This is how crazy this is getting. California is proposing that they give 2 million illegal immigrants no money down loans on a home, and they won't give that to you guys in California.
That's absolutely crazy. This is why people are leaving California. This is why Gavin Newsom has run California into the ground. That's absolutely crazy. You're going to give illegal immigrants, up to 2 million illegal immigrants, no money, no down payment loans to buy houses. But yet the Maria or the Susie or the Keisha can't afford to buy a home in California. But you're giving these people no money, no down payment homes. Like I don't get it. It's better to be an illegal immigrant in this country than to be a citizen in this country. This is absolutely ridiculous. I don't understand what they're doing under this administration or why they're allowing so many illegal immigrants to come into this country and benefit without doing any of the work. This goes against everything this country was built on. If you work hard, you pull yourself up by your bootstraps, you can make it. No, they're giving people handouts, $650 a night hotel rooms. This is crazy, but yet people are struggling. People are homeless. You won't fix the homeless population in California, but you'll give money and homes to illegal immigrants. Make that make sense. Let's continue. I digress.
Okay, so let me just stay on track here. First, the price of the home goes up $248. Second, rich people that own a home be like, fucking, I ain't going to sell my house. I'll just keep it and turn it into a rental. Third, the people that want to buy a house don't have to pay $440 anymore. They're going to have to pay $640, and their mortgage is going to go from $3,000. We can't even get anybody approved on a mortgage today. Okay, the mortgage goes from $3,000 to $4,300 overnight.
That's exactly what I said. Exactly what I said.
Before HOA, before property taxes, before maintenance, okay, before PMI. Is it PMI? Yeah, PMI, which is a 2% charge on your loan amount by the banks to insure their mortgage that they gave you. Your down payment goes up, your payment goes up, your interest payment goes up, your taxes on the property go up. And when you sell it, let's say one day you want to make, let's say you bought the house for $648, held on to it, and you get to sell it for $1,048,000, your $400,000, this is the worst part of it. Your $400,000 profit that you finally made on this house, maybe paid the house off, and then 20 years from now, you go to sell the house to make your profit, half of that's going to go to the federal government.
Absolutely crazy. So you work your behind off for 20 years to pay this house off just for it to just for the profits you realize to go to the federal government. This is state intervention. This is what I've been preaching for the going on the past few weeks now. The least amount of government intervention in my life is what I want. It makes sense, though. This completely makes sense to what Kamala Harris is. She's a socialist. Her father's a Marxist. So, and Marxism is kin to communism. Communism is what some people are calling her. So what's going to happen is people cannot afford to buy these homes, or they can't afford to sell these homes. So what's going to happen is, or they can't afford to stay in the home. So what's going to happen is the federal government now is going to go buy these homes, and it's going to be state-controlled homes. So you know what happens when the state controls a home? We've seen this in Russia. We've seen it in China. The state controls the home. The state controls the rent. The state controls who gets in those homes, right? So this is where we're heading. So it makes complete sense that Kamala Harris wants to do something like this, because what it's going to do is push out the regular mom and pop, the regular Joes like you and myself, out of being able to buy a home. The government's going to go buy these homes in some sort of state-controlled corporation. They're going to buy these houses, right? They're going to hold these houses, and then what they're going to do is they're going to control the rent and control who gets in and out of these houses. That is state-controlled housing. See how they did it in the USSR. See how China likes it. See how Venezuela liked it. This is where we're heading. Let's go. Let's continue, Grant.
Now, I know a lot of you guys don't like what's going on politically right now. There's a lot of rhetoric. There's noise. Freaking people angry, division. Don't worry about all that. Don't vote your politics. Vote your finances. If you're a real estate agent or a broker, share this with your friends, because it'll decimate your ability to sell a house and make a brokerage free. If you're an investor in real estate, you're buying real estate, you want to buy as much as you can right now, because what's going to happen is private owners like myself, okay, and that have long-term capital. We have investors that will invest for long periods of time. These assets won't be traded again. So you'll have this massive shortage. Now, this is going to be good for the BlackRocks and the institutions and guys that think like me, because we'll just own assets. Okay, put long-term debt on them, pay the debt down over long periods of time, and go back to the bank over and over and over again and pull proceeds out there.
Listen, he's giving you game. He's giving you guys game. I've told people before, even during when during C-19, when interest rates were during the Trump administration, when interest rates were low, and people were telling me they wanted to sell their home, I told them, go take out a home equity line of credit, pull the equity out of the home, because you do not pay taxes on borrowed money. You pay interest. So if you had a house that's over 200 grand in equity, so you bought your house for 200, the house is worth now 400, and you were going to receive a capital gains tax because you were not going to do a 1031 exchange because there were no houses available, so you had to sit on it for a minute. I said, pull your equity out, get that 70 to 85% out of the house, pull it out, get that borrowed money, pay taxes on it. I mean, I pay interest on it. So then when you sell the house, you make a small amount of money. There's no capital gains on that small amount of money, but you've already pulled the money out. So you don't have to pay the bank back on that home equity line of credit, because when a new buyer buys a home, it takes care of all of that, right? So you do a cash out refi, right? So this is what he's going to tell you. This is what a lot of the rich folk do. This is why they don't pay a lot of taxes. I just looked at something earlier. Warren Buffett just cashed out a lot of stock from Bank of America. A lot of billionaires are going cash rich right now. They are liquidating assets at an alarming rate. They are going cash rich, so they have cash on hand. But this is why. This is why these multi-billionaires, these billionaires are going cash rich right now and are liquidating assets. Pay attention to what the rich people do. But let's continue to hear what Grant has to say.
Are never taxed, because that's excluded in her bill. Okay, hope this helps. Share it with your friends, investors, real estate agent, brokers. This is just the numbers, folks. If I've given you a number here that's wrong, fewer homes will be sold. Inventory problem that we already have a 4 million houses short will probably go to like 8 million overnight. And the price of every home in America and the mortgage will go up by 50%. God bless. Be great. Good luck investing in real estate. By the way, it's still a great deal. Buy as much as you can right now before this thing happens, if it happens, and wish, hope, and pray and vote that it never happens.
Hey, you just saw that video. That was Uncle G spitting the game at you. Definitely pay attention. That man knows what he's talking about. Some people don't like him per se. I definitely like some of the things he says, and some of the things is, take it with a grain of salt, right? But Uncle G spitting game as he always does. But I'm gonna tell you, if Kamala gets in office, this is definitely where I'm going. I'm out of here. I am so out of here. I am going to the Cayman, mother loving islands. I am in the Cayman Islands. You know why? There's no taxes in the Caymans. No taxes in the Caymans whatsoever. So that's where I'm going to be if Kamala gets in office. I got to get out of the country, at least for 4 years until she's out of office. Hopefully she's out of office, and hopefully there's a country to come back to. This is not fear mongering. I know the country will still be here, but what shape will the country be in? I just got one more video I want to show you guys before we get out of here. Let me see if I can find it. Give me one moment. All right, so I'm gonna play this last video. It's about 8 minutes long. I'm gonna let this one rock for the most part all the way through. He's gonna explain a little bit more about what Grant Cardone was talking about, Uncle G was talking about. So I'm gonna let him rock for about the 8 minutes and 40 seconds this video has, and then I'll speak at the end of it. I'm gonna try to speak at the end of it. I'm gonna try to not interject, so we can get out of here. But yeah, just a different perspective on what this unrealized capital gains tax is going to do. So let's go ahead and get this on.
They're back at it. There's an alarming proposal circulating with surprising support. Progressive reform like this, strike that, aggressive reform like this, under the guise of fairness and equality, could fundamentally turn your financial future upside down. If Kamala gets her way, investing as we know it will be dead. And not just for the wealthy, like they're telling you. See, what's being proposed as a tax for the ultra wealthy will affect everyone. We've seen it before, more than once. And I've got the receipts, but this is more than just a tax proposal. It's a massive power grab that threatens financial freedom as we know it. The idea of taxing unrealized capital gains surfaced a few years ago by the chair of the Senate Finance Committee, Ron Wyden of Oregon, which raised some eyebrows. And then those eyebrows were further raised by...
Hey, I'm going to stop it real quick. I do not know what camera he's using, but that thing is crisp as I don't know what. I don't know what phone or camera he's using, but he's so crispy right now. It's like 8K up in here, man. So I'm going to let him continue, but I have to find out. So I'm going to tell him what phone he's using. Put in the comments so I know what phone to get next.
By senators and Wall Street investors when the then new U.S. Treasury Secretary, Janet Yellen, during her confirmation hearing, expressed support for this proposal in the interest of boosting government revenues. It didn't get very far, and many simply forgot about it. But this administration, they're relentless about getting into your pockets and controlling your life, and it's all back on the table. Turns out they didn't forget. So here's the thing. At Epic, we show people how to invest in real estate so they can escape the daily grind and retire early. And tragically, some of the most practical avenues available for people to retire early are under fire with Kamala's unrealized capital gains tax proposal. Here's how this works. Normally, you pay taxes on gains when you sell an asset, like when you sell a property or cash out your stocks. But with this proposal, you have to pay taxes every year on the increased value of your assets, even if you haven't sold them. For example, if your Tesla shares grow from $1,000 to $1,500 in a year, you have to pay tax on that $500 profit, even if you didn't sell the stock. In simple terms, you would owe taxes on the increased value of your property, stocks, or business shares every year, whether you sold them or not. Imagine being hit with a tax bill for money you never received. But Matt, this is just for people with $100 million in wealth. Well, I'll get to that in a minute. But a tax on unrealized gains presents all kinds of problems for investors, not to mention it would step all over the appeal and benefits of investing, if not kill the endeavor altogether for those looking to get ahead in life. Here's what I mean. This unrealized capital gains tax proposal would unfairly burden younger and upstart investors who typically start their investing careers cash poor. You see, any profits from their investing efforts could generate a significant tax bill without the corresponding cash to pay for it. Thus, these investors have two options. One, don't make a profit, which would make investing pointless. Or two, liquidate assets prematurely to pay the tax. Both of these options remove the incentive to invest. But Matt, this is proposed just for wealthy investors. Yeah, I know. And I'll get to how this proposal's impact will be far-reaching and cross class lines, which would include but wouldn't be limited to creating a huge hurdle while crushing ambitions for taxpayers to hit a certain level of wealth. Translation, don't get too big for your britches, young gun. Further, annually liquidating assets to pay your tax bill would serve as kryptonite to compound interest, the very cornerstone that taxpayers rely on for their retirement plans. I mean, all of a sudden, Dave Ramsey and I would be on the same team. Can you imagine that? Dave's 40-year disciplined savings plan that he promotes could realistically take 80 years to produce the same result. At least. I mean, already, most people don't make enough to save enough for Dave's plan to work. But now, they wouldn't live long enough for it to work either. Yeah, but Matt, I'm saving for retirement inside of a 401k. Well, I wouldn't get too comfortable with your tax-deferred retirement account either, because this administration, they've got plans for that too. But let's get to the reality of this. The proposal as it stands targets those with $100 million or more in assets. Bullet dodged for you, right? No. Ask yourself, how long will that $100 million threshold stay there? But they would never apply this to the little guy or even the middle class, right? Well, that's what a lot of people think. But they already have. Did you know this same type of tax was proposed in 1913? The income tax itself was proposed to affect only the top 1% of earners. But now, everyone pays it. The alternative minimum income tax introduced in 1969, that was originally just for a handful of high-income earners. But by the 2000s, millions of households, including those earning far less than the ultra-wealthy, were subject to the AMT, creating significant financial burdens for taxpayers it was never intended to target. So if you think this tax will stay locked on billionaires forever, wake up. Once this door opens, it will lead to more taxes for everyday investors and likely even homeowners. And the way they'll justify it? By saying that everyone needs to pay their fair share. Sound familiar? To be clear, this is not in the proposal right now, but it is not out of the realm of possibility. But for now, how could this affect you, even if you're not ultra wealthy? Well, easily. This isn't just about rich folks. It's about the ripple effect. I mean, think about what happens when big investors get squeezed by a tax like this. They're not going to just eat those costs. They're going to pass them down. They're going to pass them down via higher rents, more expensive goods and services, fewer jobs being created. And if you're a small investor trying to build wealth, how do you compete when the rules keep changing? The government already takes a bite out of everything you do. This could be just one more way that they take a bigger slice. So let's be real. This isn't just about closing the wealth gap or making the tax system more fair. There's a growing fear here that this is a step toward more centralized control. And the phrase, "you will own nothing and be happy," is starting to feel less like a joke and more like a reality. The government has been inching toward more control over our financial lives for years. And this could be the gateway to something much bigger. You know, policies like these, they start out as reasonable, but slowly morph into tools that erode individual freedom and property rights. So here's what's on the table. The Biden-Harris administration is proposing a 25% minimum tax on unrealized capital gains. It's already in Biden's March budget. And Kamala Harris and others are backing it under the banner of fairness and reducing wealth inequality. So despite how sweet this may sound to some people, this proposal could be a disaster for entrepreneurship and investment. If it passed, it would discourage people from taking risks, from starting businesses and reinvesting profits. I mean, why would anyone want to expand a real estate portfolio or build a business if they're penalized for their success before they succeed? When capital dries up, innovation stalls, and the entire economy takes a hit, people are worried that this isn't just about collecting more revenue, and rightfully so. It feels like a deeper move toward controlling wealth and eroding financial freedom. I mean, we've seen these small policy changes turn into bigger overreaches before, and the fear is that this could be the next step in a long march toward centralizing power. You know, today's conspiracy theory could be tomorrow's reality if we're not careful. No, Matt, this time it's different. No, it's not. It's all in the same playbook that we've seen being run over the last 36 months. You know, after COVID, hydroxychloroquine, ivermectin, the Russian collusion hoax, Hunter's laptop, January 6th, Gretchen Whitmer's kidnapping plot. Those were all once conspiracies. So what makes unrealized capital gains for all different? And framed with everything else I just mentioned, it feels even more possible that it will reach you at your income level, doesn't it? So what can you actually do? Well, first, stay informed. Policies like this, they can move fast. And the last thing you want is to be caught off guard. Second, consider diversifying your investments to spread your risk. Maybe look into assets that are harder to tax in this way, like certain real estate strategies or even alternative investments like art, collectibles, and jewelry. And I suppose you could talk to a tax strategist now rather than later, but I don't know how much they could do. But what you don't want is to be scrambling to figure out how to navigate this if it does get passed. And then I guess that would give you one more actionable item. Vote.
Yeah, so I appreciate the video. As you can see, Biden and Harris were proposing this before. Looks like Kamala's keeping that in her policies and what she wants to do. I know they said they don't want to go back. So I'm guessing their motto, don't want to go back, means they don't want to go back to prosperity. They don't want to go back to record low inflation rates. They don't want to go back to record low unemployment rates. They don't want to go back to record low interest rates. They don't want to go back to that. I guess that's their motto. Don't go back. But you can see how this 25% on unrealized capital gains tax can affect not only in America. You saw how it is in Canada. So you already have something you can look at to see what it's going to be like. So this is ridiculous, man. This is wild. You have to stay informed. You have to stay out of identity politics. You have to vote facts over feelings. You have to vote facts and financials over feelings or identity politics. You have to compartmentalize the fact that you do not like Trump and vote for what is right for you and your family. I'm going to try to show one more video. I'm going to show just a little piece of it from Fox News. Give me one moment to pull that up. So it looks like I was able to find the video I wanted to play. I'm only going to probably play about 3 minutes of it so we can get up out of here. I know this video is going a little bit long. So I'm going to play a little bit of this and then we'll get out of here.
Compare that to Donald Trump, because I think everyone here knows he doesn't actually fight for the middle class. Instead, he fights for himself and his billionaire friends. And he will give them another round of tax breaks that will add up to $5 trillion to the national debt. Instead of a Trump tax hike, we will pass a middle-class tax cut that will benefit more than 100 million Americans.
And of course, we want to talk more about both plans. Joining me now is former Council of Economic Advisors Chairman Kevin Hassett. Kevin, good to see you. Thank you so much for being here. Can you give us your reaction to these dueling economic plans? Explain to us how you see the differences in each economic proposal.
Right. Well, right now, Vice President Harris was just talking about taxes. And if we look only at taxes, then the difference between her proposal and President Trump's proposal is that she wants to raise taxes on unrealized gains, raise taxes enormously on estates, which is going to make it impossible to hand your house over to another family, and raise taxes on companies that make jobs. But then on the individual side, she's talking about her middle-class tax cut. That middle-class tax cut is just plagiarized from what Donald Trump says he wants to do. And when she talks about the $5 trillion cost, that's a way overestimate by a partisan joint tax committee, by the way. The America First Policy Institute is going to come out with a number that's probably about half that. But that cost is almost all the middle-class tax part of President Trump's proposal. And so what she's got is a big demand-side policy, which is the middle-class tax cut. And then she's attacking the supply side, which is just what she and Biden did to create inflation. And so, a few months ago, she was all over TV saying Bidenomics is working. And it's clear from this proposal that she believes that, because she thinks that you can jimmy up demand and attack supply, and that'll reduce inflation. But we know we tried that before. We ended up with 9% inflation, and we're going to head there again if those policies pass.
Yeah, I mean, we haven't talked about her threatening corporations coming up with this whole idea that there's price gouging going on, and that she's going to make a ban in price gouging and come up with new penalties. So the regulation part of her plans we haven't even gotten into yet. It'll probably be higher regulations than what we're seeing now. But the Wall Street Journal yesterday came out with a piece called Kamala Harris's tax increases and cuts take shape. The author there trying to make the case that she's not only raising taxes on some, but she'll cut taxes on other and leave most Americans' taxes unchanged. I don't know if I'm buying that, because if you actually are not extending the tax cuts, most people's taxes go up. So, I mean, I guess she's trying to make it as if it's a continuation of Bidenomics, which included hundreds of billions of dollars in spending and, of course, proved to be unpopular with most Americans. Are you expecting that to take place?
You know, I don't know what to expect to take place. It's kind of like, let's make a deal tax policy, like we're going to choose the door and eventually we're going to find out what's behind it.
You're on record saying that a Harris administration's economic agenda would shut down the entire U.S. economy. That's what you've said.
That's right. And this is the war on capital part. So if you think about it, imagine we had a tax on unrealized gains. And so in order to pay the tax, everybody has to sell their stuff. And then everybody's doing that all at once. And so imagine what that does to markets. We got a 65% tax or higher on your estate. So you can't leave your money to your kids anymore. But then we've got this price gouging thing. And if you look at the details of it and where it came from Elizabeth Warren, the way it works is that the Federal Trade Commission, controlled by the Harris administration, is going to look at companies, and they say food, but it'll be everybody. You watch. They're going to look at companies and say, your prices are too high, you're making too much money, and then they're going to hit them with an exorbitant fine.
So there you have it. That's Kamala's plan. This is how she's going to ruin the economy. I hate to be the bearer of bad news. I hate to be someone who sounds like I'm fear-mongering, but I've said this before and I'll say it again. When I knew she was running for president, when I knew she got the endorsement, I was afraid of her presidency. There's too much out there that she's done that scares the living mess out of me. I'm trying to tell you, this economy is going to go even further down with her as president. And again, this is not me against women presidents. It's not me against a woman. It's not me against a black woman. This is against me against her. I didn't like her as a VP when she first got the nod, and I don't like her now. And it's just because of things that she's done, things that she's wants to pass, her policies. They just don't add up to what America should be. And that's where people who can start at the bottom and go to the top. People can thrive. Under this Biden-Harris administration, people have not been able to thrive. And there you have it. That's Kamala Harris's plan in a nutshell, how it's going to ruin the economy. I'm glad we were able to get Uncle G on, and so you can see what his video was all about, as well as Epic Real Estate, who helps people build wealth through real estate. But Kamala Harris's America looks bleak, looks scary. And I hate to be that bearer of bad news or the one that feels like I'm fear-mongering, but her United States looks scary. What are we going back to? Because we're not going back to prosperity. Are we going back to the Great Recession, the Great Depression, the Great Resignation? So it's scary, man. Make sure you guys vote. I'm going to say it again. Make sure you guys vote with your facts and your financials, not your feelings. But I'm going to go ahead and end the class here. I want to thank every single one of you guys for showing up, hanging out with me for the past 20, 30 minutes. But as you know, class dismissed. Hey, the Distinguished Professor here. Make sure you click here to the Distinguished Professor YouTube channel for all of our hard-hitting panel talk, our hottest reaction videos, and compelling analysis on modern dating. You will not find this information anywhere else.